We're covering the biggest winners and the biggest losers of 2025. MarketBeat's Thomas Hughes is here with the 5 most downgraded stocks of 2025 and the 5 most upgraded stocks of the year. Thomas, excited to dive into this big list of 10 stocks today and also look at what the outlook for these stocks is for the new year ahead. So let's get right to this list. It's a lot of stocks to cover. Let's start with the 5 most downgraded stocks of the year.
Yeah, right. The 5 most downgraded stocks of the year are pretty interesting because generally speaking, the analysts are still very bullish on these names. There was just a market reset. There was some sluggish growth. Took some time for some things to happen, as far as their businesses went. So those downgrades are part of a reset, and I think that they're all set up to rebound in the coming year.
Interesting. So these aren't, all lowball stocks necessarily. They just had some of the most downgrades for different reasons. I'm excited to dive into each one and talk about why those downgrades happened. This first one makes a lot of sense on the list too.
Well, right. The first one is Lululemon. They struggled for some domestic sales. They had some margin impacts tied to tariffs, but they seem to have turned a corner late in the year. So that string of early year downgrades kind of ended with the calendar Q3 report, which included some outperformance and had some other good news. They decided to change the CEO, which should help reinvigorate the business, get some fresh blood into there. And they're focusing on international expansion. International expansion is huge because international markets are much larger than domestic markets. And over time, it could more than double the business.
Okay, that's really interesting. Also curious to see the timeline of these downgrades. We're looking at overall in 2025, this is one of the stocks that had the most downgrades. But when did those come?
Well, they were mostly in the first part of the year as the stock was struggling, as those tariff headwinds were emerging. So then late in the year, we realized that tariff impact wasn't as big a deal as we thought it was, for one thing, but also some other positive news as far as fundamentals go with the CEO change, with the refocusing on growth. But also they announced a very large share repurchase authorization. They increased their authorization, I think, by $1 billion. They've got about $1.5 billion left, which just ensures that they'll have a nice aggressive share reduction pace in the coming year, which provides investors with a lot of leverage.
Quick look at the chart. How did they end up ending the year? Have they recovered some of the ground lost yet?
Looks like we have a bottom. They hit bottom late in Q3, it looks like. Kind of hammered that bottom out during late Q3 and early Q4, and then it began rebounding in late October and early November. Yeah, we're up about $50 from the low. We've regained support at the 150-day moving average. We're on track to cross above a critical resistance point, which is right near 225. Once we get above that level, I think we'll have more of a free, clear, easy sailing for some more upside. But I think it's just a matter of time for that to happen.
All right, a good first stock to make the downgrade list. What's that second most downgraded stock of 2025?
Well, the second one is United Parcel Service. This company has been struggling for years with the impacts of the supply chain snafus. In 2023, the supply chain issues that really boosted their results. They've been struggling since then with growth, but what they've been doing is leaning into operational quality. So while their business has been contracting, they've been improving their profitability. The news in Q3 this year, late 2025, is that, there's still some contraction happening, but better than expected results. Margin improvement is sticking. They're set up for a leverage rebound, earnings recovery in the coming year, and they're set to return to growth, which is a really big mover for the stock. And I think it has this one also set up for a rebound.
Okay, interesting. When were most of the downgrades made on this one, as far as timeline of when those downgrades happened?
Well, again, it's earlier on in the year, and that's how it is for almost all these stocks. Earlier in the year, we had some uncertainty and some headwinds emerge, caused those analyst resets, caused the stock prices to fall. And then with the fiscal Q3 results during the Q4 reporting season, we got a lot of this good news or reaffirming news that helped really boost the analyst sentiment, get them back in line with the market and reaccumulating the stock.
So it sounds like a lot of this had to do with those April tariff news that we had, and those downgrades came kind of around that time. Have we seen any positive trends in analyst upgrades, price action since, later on in the year?
Well, yeah, so since that last report, we have seen some firming of sentiment, which is kind of affirming the bottom in the market and pointing to some upside, at least enough to get us above that critical resistance point. Assuming that the following reports are good as we expect, I would expect to see that analyst sentiment trend continue to strengthen and help this stock rebound gain some momentum.
Yeah, some interesting moves for this really large company. Will be interesting to see what happens for them in 2026. I know this is in no way a small cap company, but if you're looking for a list of some small cap names to consider, make sure to check out this recent article. It's MarketBeat's top 5 rated small cap stocks from 2025. It's a brand new premium article just for our premium subscribers, but you can take a look at that list for free right now by using this QR code or the link right in the description of this video. Again, it's MarketBeat's top 5 rated small cap stocks for 2025. All right, let's move on to the third name on that downgrade list.
Right, that's Chipotle Mexican Grill. Chipotle has had some struggles. They had a CEO change. It took some time to get over that. They're still kind of recovering from last year's stock split and also macroeconomic headwinds, sluggish growth. So the analysts reset their sentiment, kind of trimmed some price targets. But like with all these names, the market has overrun that price target reduction, creating a value opportunity. There are some catalysts coming up in the coming year that include a refocus on accelerated store count growth, including international expansion, which again could double the size of this business over the coming years. And that's helped reinvigorate analyst sentiment and put a bottom in the market.
Let's talk about this chart a little bit. This one does kind of sound like it's still in that oversold territory.
Right. Chipotle has corrected pretty hard. I think it dropped more than 50% from the high to the low. The rebound has only just begun. I would expect to see this market to have some volatility in the coming weeks, coming months, potentially retest the $30 level. But I view that level as a pretty solid bottom. If it were to break below that level, we would need to reassess the outlook. But right now, it seems like the stock is set up to grow. It's certainly a value. It creates plenty of cash flow, and it does have capital returns in play, including share buybacks.
Now, one thing I want to distinguish with this one, do you think some of the really difficult price action and sentiment that Chipotle had in 2025 was still just a reaction to that stock split? Do we normally see that when we have a stock split like this? Or were there other market economic factors into play here?
Well, there were a lot of factors. I mean, the stock split kind of set the stage. Stocks that split tend to have a correction following it. But then there was the CEO change that kind of sapped some market confidence, macroeconomic headwinds, sapping consumer appetite for higher priced food, which is what Chipotle really is, higher priced food. But those things have kind of haven't been as bad. So the stock split action is way in the past. The CEO change seems to be going pretty smoothly, so that's not so much a concern anymore. And macroeconomic headwinds are expected to become tailwinds in the coming year. We're expecting to see some tax relief for lower income workers, tipped workers, and overtime workers. We would expect to see carry over into consumer spending and help with the discretionary income and stocks like Chipotle.
Yeah, it will be interesting to see if that has an impact at all or not. It's been a crazy year for Chipotle. I'm really one of the stocks I'm following in 2026 to see if we do see that turnaround, simply because I think in 2024 was such a great year for Chipotle. It really switched over in 2025. So we'll be interested to see if it makes another switch in the new year. All right, Thomas, let's get on to that fourth stock on the downgrade list.
Right. The fourth stock is Salesforce. Its struggles in 2025 included increased investment activity, kind of cut into their margins, and slowing growth. But the story later in the year is that those investments are paying off, and they've increased their guidance, expecting an acceleration back into double digits to happen in the coming year, which has spurred the analysts to act. And what we're seeing now is a reversion of the analyst trend. Earlier in the year, they were lowering targets and kind of reducing their sentiment ratings. But later in the year, since that last earnings report, we've seen sentiment firm, price targets improve, and they're leading the market to new highs.
Salesforce is one that you have been very bullish on for a while. Why has that not really shown up in the chart so far this last year?
Well, there's been a lot of concern about growth. For it to maintain its premium quality and to maintain that uptrend, it needs to sustain a high level growth. Falling below 10% is no longer really a growth stock, so it was important for it to reinvigorate that growth outlook, which it's done. At the same time, all those investments were cutting into the margins, and earnings is also important. What we're looking at now is re-accelerated growth and reinvigorated earnings, which is reinvigorating market sentiment, and that has leading us to see a stock price rebound.
Does the timeline match for the other stocks we talked about of when these downgrades happened? Were those mostly happening in April, or did some of these downgrades for this stock happen later on in the year?
It was mostly throughout the first part of the year. Q1, Q2, and Q3. We see the market start bottoming about mid-year, moving sideways, and then really confirming that bottom after the latest report.
Before we move on to the last downgrade on the list and then get into those most upgraded stocks, I want to hear if you're still bullish on Salesforce for the new year and why that might be.
Oh, absolutely. And that's because of agentic AI. When it comes to data collection, data mining, and then applying that data, Salesforce is a clear leader. I mean, it's got most of the Fortune 500 already as its clients. It's deepening penetration, and it's all centered on its agentic capabilities.
All right, another great one to watch for the new year. Let's get into that final most downgraded stock of 2025.
That Fifth most downgraded stock is Comcast. Comcast was just struggling with growth as everyone else was during the year. Certainly had some macroeconomic headwinds, but the late year data includes, a significant increase in coverage and sentiment ratings tied to the forward outlook, which is a resumption of growth, improving margins, and sustained strong free cash flow, which helps support its capital return. As far as stocks go and their attractiveness, Comcast right now is yielding over 4.5%, and it's a robust stock purchaser. It reduced its count by 5% year to date as of Q3, which is really a lot of leverage for investors. You've got market or inflation beating dividends, but also significantly share count reducing buybacks.
All right, these last two on the list are interesting because I think both Comcast and Salesforce, not quite as AI plays, but definitely in that tech sector a little bit, which has been more of a hot sector in 2025. Why do these two kind of tech-centered companies still make this list for downgrades?
It's just all about the analyst sentiment. I mean, these are both buy and hold quality stocks. They had a more robust outlook earlier on the year. The outlook took a hit that caused analysts to reset their outlook. Stock price followed suit, but now late in the year, we see signs of bottoming, signs of improving coverage and improving sentiment, which points to rebounds in 2026.
And what specifically about Comcast has you excited for the new year? Is there anything on the horizon that could show that there could be a turnaround coming for this company?
Well, the biggest indication is the forecast for resumed growth. So the company struggled in 2025, but it's expected to return to growth in the coming year. And that points to, improved earnings growth, and improved cash flow for capital returns. And for this stock, I think capital returns are really the driving force of why you would want to own it.
All right. Well, that is a good look at that list of the 5 most downgraded stocks for 2025. We are switching gears and moving to the most upgraded stocks of the year. Before we get into the individual names, do this list of 5 have anything in common? And also want to talk about most upgraded. Does that mean the number of analysts increasing their price targets, or does that mean the price targets increase the most? Kind of what does that specifically mean?
Right. So when I'm covering this, I'm looking for the amount of coverage. So with these, it's the number of analysts covering the stock and the number of positive revisions that we've seen in the last year. So with the first on the list, Google, 119 bullish updates from 51 analysts. So that means all the analysts issued at least 2 revisions this year, some of them 3 times. So this is a very strongly bullish uptrend in Google's sentiment trend.
All right. Well, you got that first stock for us. So we're talking about Google as the most upgraded stock of 2025. Let's talk about how big some of those price target revisions were for this company.
The consensus rose 50% in the last 12 months. So that's pretty significant. We're leading to the high-end range. Consensus assumes fair value at the end of the year, but it's been moving up pretty significantly, helping to drive that uptrend. And we're looking at 20% upside at the high end of the range. And what I'm expecting to see happen over the course of the coming year is for this trend to continue. Consensus will continue to rise and support that market, while the high end also continues to rise and lead it higher.
What areas, Google is such a massive company. What areas of their business are seeing some of the most growth? And I know there's some discussion out there of, could Google get into separate companies? Is it becoming too large? It is crazy to hear about a 50% price target growth on a company that's already this massive. I mean, it's just such a large company.
So with Google, a lot of the bullish sentiment is tied to a favorable regulatory ruling, which means that it does not have to break up, at least not right now. So that alleviated some investor concern. But then at the same time, the company seems to be firing on all cylinders. We've got the launch of Gemini 3. It's being viewed as a leading model right now. We've also got strength in the Google Cloud platform and a lot of new revenue tied to its proprietary semiconductor technology, which is pretty big news considering how in demand data centers and GPU technology is right now.
I'm glad you mentioned Gemini. I think earlier on in the year, there was some discussion about whether Google could be impacted from the rise of use in ChatGPT and other AI sources instead of search engines like Google. But it does seem that Google has embraced that AI, artificial intelligence search on their platform just as well as Gemini, right?
Oh, yeah, for sure. I think you can see Google's use of AI throughout of its offerings right now, especially in Google search. The nature of the responses has changed. You get a little bit more depth. You can ask questions and get good responses, I think. So you can certainly see Google's investment in AI paying off.
All right, let's get to that second most upgraded stock of 2025.
Right, that's CrowdStrike. CrowdStrike is uptrending already because of its strong results, and that's tied to its AI-enabled platform. It's got an aggressive acquisition strategy, which is boosting its growth and its long-term outlook, and its operational quality. It's got industry-leading growth, industry-leading client acquisition and retention. It's got strong tailwinds for 2026 with the rising use of digital and the increasing use of cloud. We're looking next year for another 22% revenue growth, which is pretty hot. We were talking earlier about being able to sustain high-level growth, so CrowdStrike certainly qualifies as a still hot growth stock, and all of this is being seen in the analyst revisions. Another stock that's got 114 revisions in the last year from 52 analysts, so we're looking at more than two revisions per analyst, so that's a sustained uptrend that's carrying into the end of the year, with next year's results expected to also be strong and help sustain that trend.
All right, this one's really interesting. This wasn't a name I was expecting to be number 2 on the list, but clearly there's a lot of bullish sentiment out there for the future of CrowdStrike. What does that mean for cybersecurity as a whole? Do we see any other cybersecurity names on the list, or is CrowdStrike really the leader in this sector?
Cybersecurity is a strong segment. If you look at this market, it's highly fragmented. CrowdStrike is a small company. It's not the largest cybersecurity stock, but Palo Alto Networks, which is the largest cybersecurity stock, is still very small, only about 2 or 3% of market share. So as far as the outlook for the coming year, CrowdStrike certainly has plenty of momentum. It's showing utility for its clients, which is going to help it gain market share, deepen penetration of existing clients, and just continue to dominate this fractured market.
Now, I can't remember if this was this year at all, but the CrowdStrike breach issue, that was more of a 2024 story, right? Was there still any lingering effects of that in 2025?
At the beginning of the year, I would say there was, because there was, some uncertainty. But as the year progressed, we got some affirmation that it was going to be able to sustain growth and sustain cash flow margins, and that's helped to really invigorate sentiment and keep the stock moving higher over the long term.
Yeah, it's a good story of overcoming some adversity, and it really must show that they have a product that companies like because they're continuing to work through even the issues that were had a couple of years ago. Let's move on to that third company that is the most upgraded stocks of 2025.
Right, so that's Snowflake. And Snowflake struggled in 2024, even was kind of struggling at the beginning of this year due to some CEO issues. They had a CEO change, but that new CEO has reinvigorated the business, helped to sustain that high 20% pace, and affirmed an outlook for a sustained 20% pace, which is what we need for these kind of hot growth tech companies to continue trending higher.
This is another one that is so interesting that it made the list of the most upgrades because Snowflake is not a huge company. How many analysts and new analysts have kind of jumped on board to cover this company?
So actually, we've got quite a few analysts covering this stock. There's 43. That's probably 4 times as many as the average company. That shows a high degree of conviction from the market and in the ratings. Right now, the ratings is a moderate buy with a 25% upside at consensus, but the trend is leading to the high end, which gives us a 45% upside potential in the coming year.
Very interesting. And again, talk about Snowflake. This is one you covered on the channel before. What do you like about this company?
Well, it's a comprehensive data-based service, so it's going to help you collect and manage and use your data throughout the data cycle, and helps preserve it in a way that when you use it, you can still go back to the original data points. So some methods of storing data, you might take it and it might get structured in ways that alters it from its original format, which is good for however you want to use it. But if you ever want to go back to that original format, you're going to be out of luck. And Snowflake is one company that is helping to facilitate that.
Yeah, Snowflake is an interesting company. It's why I've already added it to my Bridget Spy's watch list earlier in another video we did this year. Because again, it's one you're bullish on. I think it's an interesting one. And I've liked following the progress of what the stock is doing, some of the moves it's making on my watch list. I am going to add one of these 10 stocks to the watch list, but I'm waiting till the very end to add one because I am really intrigued by the last stock on your upgrade list. So before we get there, we've got one other name to cover. What's that fourth most upgraded stock of 2025?
Yeah, that's Amazon. Amazon's business is firing on all cylinders this year, the consumer side and AWS side. Consumer growth is running in the low teens, gaining market share, while on the AWS side, Growth accelerated into the 20% range, which is where we wanted to be, nice and hot. Gaining share, it's now more than half of the business, which is also pretty significant. And it's all, pointing to a pretty solid year ahead. Analysts are expecting significant growth to continue and strong margins, which plays into capital returns.
I'm curious with Amazon, kind of a similar question to Google. This company is getting so large. Is it just the traditional platform of the retail and shipping sales that we see, or are there other areas of Amazon's business that are growing even more?
Well, it's AWS is really underpinning the growth right now. The consumer side is good. That's legacy business, that's core business, but the growth driver is AWS. It's growing at a 20% clip, expected to continue growing at a strong pace in the coming year and producing pretty solid margins.
How big can a company like Amazon with AWS actually get? That's a good question, and I'm curious what analysts are saying, but how much more the stock can grow in the next year because it's already so giant.
Well, right, as far as the stock price goes, consensus points to 20% upside, but the trends point to the high-end range, so we could be looking at 40% upside in the next year, could easily be reached before the middle of the year based on data center trends and cloud spending trends. I would not be surprised if it happened.
Yeah, this company just keeps growing. That's something in common with several of the names on this list, these giant companies that continue to grow and see positive outlook because they've proven time and time again that they are continuing to grow. And that is true of this last company on the list. This is the fifth most upgraded stock of the year, and it's a name many are familiar with and one you've been bullish on for a long time too.
Yeah, and this is Meta Platforms. The worst thing that we can say about Meta Platforms' year is that it increased its plans to spend on AI. To me, that's good news. AI has improved internal efficiencies, it's improved customer satisfaction, it's improved ad metrics, revenue per ad, providing many tailwinds for growth that are expected to continue in the coming year.
Yeah, some improvements ahead for this company. How much growth are analysts saying that they could see with Meta?
The stock price revision trend has been pretty hot this year. Right now, we're looking at a potential for 25% upside at the consensus, which is sufficient for a new all-time high, but the trends are pointing to the high end, which adds 35% to it. So we're looking at potentially a 60% gain in the coming year, driven by this company's growth and its operational quality. Because with them all, you can grow, but if you're spending more money than you're making, your stock's not going to go anywhere. So Meta Platforms and all of these other companies are monetizing AI in a way that's producing value for themselves and for their clients, and that's what's driving the stock price and the sentiment trends.
Yeah, that major investment that Meta is making in AI will pay off eventually, and it won't have to be continued investment once it's built too, is another thought that I have on the future for Meta.
Absolutely. You spend a day to build the machine. You don't have to build the machine every year, but you might need to update it or, work on it some. So we would expect to see those spending numbers come down in future years, helping that cash flow, helping that capital return outlook.
Well, that is why I'm adding Meta to my list of Bridget's buys, my watch list. I know it's a company you've been bullish on for a while. I think the analysts are very bullish on this one too. And it will be interesting to see how much more it can grow in 2026 and if that AI investment pays off. So I'm adding this one to the watch list. Go check it out for yourself at marketbeat.com/Bridget to follow the progress on all of the stocks we talk about on this channel. If you missed our top 10 list of the top 10 stocks that were our biggest winners of stocks we called on this channel, it posted Christmas Day. Make sure to watch that one. It's in person with me, Chris, Thomas, and Jeffrey. Check that video out here.